What is up, everybody? Welcome back to Bitcoin and Markets. My name is Ansel Lindner. It's been a couple weeks now since I've live streamed, went on a little vacation with the family for spring break, but I'm back, raring to go, ready to get into this. If you guys are new, I go out on YouTube, Rumble, Telegram, my home base for my community, live streaming there, and Twitter today. So wherever you guys are watching, like, retweet, comment, subscribe. I will be going through the comments at the end. Excuse me. So every Monday I put out the Bitcoin fundamentals report. I've been doing that for about 5 years now. And then I've decided, hey, I'm just going to read through it, discuss my kind of tangents as I go through the report and bring you guys along with me. And it's kind of an interactive way to go through the newsletter. So, okay, let's do that. Let's share the screen. And there we go. I'm going to maximize this for Telegram. So bitcoinandmarkets.com, this is my home base for all of my content. I did get out this other blog post. I've made it public now. It's a response to the American Institute of Economic Research's Salter, he's the author, on inflation and interest rates. And I just go through my thoughts on that, have a little interesting graphic, but you guys can check that out. It's now open to the public, but paid members get early access to things like that. What else on here? Oh, let's go to Bitcoin Magazine Pro real quick. Bitcoin Magazine Pro, that's bmpro.substack.com. I think they also have their own URL now, which is, hold on just a second. I think I might be muted on Telegram. Let me check. No, I'm not. Okay, sorry. I think they have their own URL, bitcoinmagazinepro.com, but check that out. At least you can go to Substack, bmpro.substack.com. I write for them 3 posts a week, trying to continue with Dylan and Sam Rule's work that they built up there. And let's see, what did we do? Like this last week, I wrote Exploring BRICS Pay, a new blockchain-based payment system versus Bitcoin's global influence. And this was a fun one to write. Talked about the background of BRICS Pay, not BRICS, but BRICS Pay. So it aims to replace SWIFT, et cetera, monetary evolution or payment, perception versus reality. Talk about how it's not a direct competitor to Bitcoin because it's just a rail, a payment rail. Then I go through BRICS Pay versus Bitcoin, talk about the nature of the currency, the underlying technology, and I also give a Bitcoiner perspective for each one of these. So that's kind of interesting. Purpose of the systems, value determination, et cetera, et cetera. Then I end up with this was the funnest part to write for me, Bitcoin on BRICS Pay and Bitcoin-backed government currency. So, if you follow my content, I think that the eventual thing is going to be backing the US dollar with Bitcoin. Other currencies are going to do the same thing. Bitcoin is not a cryptocurrency. It is money. There's a big difference. So currency is a denomination of an official denomination of an underlying money, like how many dollars per ounce of gold. The gold is the money. The dollar is the currency. And so Bitcoin is not a currency. It is money itself. And anyway, so the people are going to back their currency with Bitcoin eventually. And I talk about all that, how you can use Bitcoin on BRICS Pay. And let's see, the BRICS nations are misinterpreting the waning trust in the global economy as a mere malfunction in currency, access, and payment mechanisms. However, they will soon realize that simply adopting alternative means of payment, which is what BRICS is, remember it's a payment rail, or BRICS Pay. BRICS Pay is a payment rail, does not address the underlying trust deficit inherent in credit based monetary systems, especially at the twilight of the greatest global credit cycle in history. In fact, relying on their own currencies will exacerbate liquidity and elasticity issues. By using BRICS Pay and their own multiple currencies, they're turning their back on convergence. So money tends to converge to one thing. But if you're using a bunch of different currencies in a free floating type of payment rail system, they're going to exacerbate liquidity issues, okay, and elasticity issues that they're misinterpreting. They think it's a malfunction in the currency access and payment, but it's actually waning trust, global trust in the system. What is truly needed and will inevitably be demanded is a neutral commodity-based currency that embodies trust. In Bitcoin, we trust. Okay. So that was last week's BM Pro post. Like I said, I have fun writing that. I also come out with different things like this Mining Pro dashboard, and we pick out a bunch of different metrics and we go through insights that we can grab from all the different parts of our dashboard, like mining activity, public miner stock performance, network traffic. I have a chart of the day usually and the full dashboard. And we have one for market. So all of the market different numbers. Let me pull this up. I actually did this on vacation, so it has to be worth it. Deep dive into Onchain metrics. We talk about that kind of stuff. What else? Price metrics, all the moving averages. I want to add some more to this, like RSI and like a daily RSI, weekly RSI, what that can tell us. Derivative markets, what that's telling us. Bitcoin and global macro. So anyway, that's the type of stuff you can find out on Bitcoin Magazine. We put that out, and I really like being part of the team. We have some plans for Bitcoin Magazine Pro, so stay tuned. Okay, let's get back to what we came here for, and that's the Bitcoin Fundamentals Report, number 281. And I always start out with a meme. This one is from Bitcoin Meme Hub. Been following him on Twitter for years. There's nothing really behind this other than Powell. The FOMC is this week, so we'll be talking Powell stuff later. Trump is big news, and I just thought this was funny. Okay, so let's get into the snapshot of Bitcoin that I put up top for you guys. Weekly trend is cooling off. We'll of course, go through the price, but you'll get a flavor for that whole idea here. Media sentiment is positive. I switched it from neutral to positive, even though we have some stuff like the administration and a mining tax. They're reintroducing a mining tax bill. I don't think that's going anywhere. And overall, the media sentiment is positive. We have Matthew Saylor on all the time. The people on CNBC are talking about Bitcoin daily. The ETFs are just exploding, taking off like crazy, more than pretty much everyone's wildest dreams. We had $1 billion inflow day last week. So very positive media sentiment. Network traffic is moderate. Mining industry is stable. Days until halving is only 30 days. We are at the 1 month mark until the halving. Price, even though we had this cool off, sell off here in the last few days, since the last issue of the newsletter, because I skipped last week with vacation. So it's 2 weeks. It's still up $500 or almost a full percent in the last 2 weeks. Market cap is sitting at 1.3 trillion. Satoshis per dollar, 14.91, and that makes one finny $6.70. This is my denomination. If you guys are new, I've been using the finny for a long time. It's right in the middle of the decimal places, 10,000 sats or 1/10,000th of a Bitcoin. And I think it's a nice unit bias denomination. Okay. Mining sector. Last adjustment was on Thursday, I believe, and it went up almost 6%. Next estimated adjustment is in 9 days, and it is estimated to be a negative adjustment at this point. But at this point, last adjustment, it was negative, and it turned out to be positive 6%. So uh, lots can happen in 9 days. Mempool is sitting right around 200 megabytes at the time that I pulled the data. Fees for the next block, $4.22 or 45 sats per virtual byte. Low priority fee is $3.94. So not really much, difference there. Lightning Network, this was kind of surprising. We had mixed results here for Lightning Network. Over the last 2 weeks, we've seen a increase in the number of Bitcoin capacity by 2%. So 90 Bitcoins have been added to the capacity, but channels have dropped by 2%. Over 1,000 channels lower over the last 2 weeks. So interesting mix result here of Lightning Network. I like to see any positive numbers, honestly, in this. I wish Lightning developers and Lightning users, which we are Lightning users here at Bitcoin and Markets, because if you win the monthly forecast competition, then you get $20 in sats over the Lightning Network. So yeah, I wish Lightning Network all the best. It's just not really panning out at this time. Okay, in case you missed it, is the next section. Just link to all my other type of stuff that I've been putting out, my blog posts. Okay, headlines. Let's get into the headlines. All right. I just have a disclaimer up here that I missed last week because I was on vacation. Thanks for subscribing. Don't forget to share on social media and with your friends and family, especially this newsletter. I think it's a comprehensive newsletter, and it goes along with a live stream like this where I can talk through it. It might be more engaging for people. And I've never sold a scam. I'm never going to get you hooked into some sort of side hustle like other podcasters have. So this is strictly a Bitcoin educational podcast, and I appreciate everyone who supports. Okay, first story is Craig Wright's long-running Satoshi claim analyzed and debunked. This is a story from Bitcoin Magazine, walks through it in detail. So last week, a judge in London's High Court of Justice formally determined that Craig S. Wrong is not Satoshi Nakamoto. This news made very big headlines in the Bitcoin space, of course, confirming what most longtime Bitcoiners already knew. So we already knew this. This is not a big surprise. So the Cryptocurrency Open Patent Alliance, or COPA, man, why can't they just say Bitcoin? To take a bold step in 2021 when it sued him, Craig Wright, in British courts to obtain a ruling over whether Wright has copyright ownership of Bitcoin's white paper. Justice James Malloy cited the, quote, overwhelming evidence, end quote, as he made an immediate ruling against Wright's claims. COPA released some of the evidence against Wright independently, including the particularly damning association that Wright has used ChatGPT to forge documents on an industrial scale. Their legal team accused Wright of a massive campaign of dishonesty and forgery that strayed into farce, going so far as to claim that Wright was actively fabricating new documents during the course of the 5-week trial. Malloy claimed he would give a more detailed account of his reasons at a later date, but the actual verdict is clear. Craig Wright is not Satoshi, is not the author of the white paper, and did not create Bitcoin or its software. So hopefully we can put this chapter behind us. I said we all knew Craig was a liar and a scammer, but it is nice that he will be unable to threaten the livelihoods of Bitcoiners again. He sued a lot of people that called him a fraud. That's horrible, of course, and I'm glad that he won't be able to do that anymore. This trial has also produced interesting new early emails with Satoshi that had yet to be made public. This was the right decision, and hopefully we can put Craig Wright behind us as a particularly scammy footnote in Bitcoin's history. All right, next headline. Grayscale plans low-fee GBTC spinoff, the Bitcoin mini trust. Looks like they just want to wind down GBTC as a product completely. Too much baggage? So this is the headline from the CoinDesk archived story. Grayscale is seeking approval from the SEC to introduced the Grayscale Bitcoin Mini Trust, seeded by a percentage of GBTC shares. Grayscale Bitcoin Mini Trust, or just BTC, will be the ticker. I can't believe they would give them that ticker. It should be MBTC for Mini BTC or something like that. Will have lower fees, and the spinoff from GBTC to BTC will not trigger a capital gains tax event for GBTC shareholders. The fees, which are not being disclosed at this time, will be competitive with some of the low-cost Bitcoin ETFs in the market, a person close to Grayscale told CoinDesk. So it's very interesting. I think the GBTC fee is still 1.5%, which is light years above where all of these others are. Most of them are free for the first 6 months, I think, or $5 billion in assets or whatever it was. And I think, was it Fidelity or Van Eck? They just said they're going to have it free for multiple years or something, out to 2025 or something like that. So, 1.5% for GBTC is very high fees. This Grayscale Mini, if it has lower fees, it's almost like they just want to wind this down, close down GBTC entirely, which is interesting. Okay, so that was a headline. Let's go on to the next one. Elizabeth Warren gets trolled, and I didn't really have much to say about this, but I think it was funny. So she tweeted that my staff and I recently became aware of an illicit so-called meme coin featuring a profane bastardization of my name. We want to be clear that I have no role in this token. This defamatory and likely fraudulent crypto asset security is just another proof that big crypto will stop at nothing to attack us. Let's make a check. No, doesn't say anything about Bitcoin. It has nothing to do with Bitcoin. It's all about just scammers. I mean, scammers have been around forever. They're going to be around forever, guys. Okay, there's going to be people that just have a scam and they call themselves crypto, but they have nothing in common, right? I just saw a tweet where some launch of some new coin was like they exit scammed before they even launched it. And they tweeted, oh my God, guys, I can't believe this happened. I locked my keys somehow. I lost my keys. And now the contract won't let me access the contract. So we have to stop the launch or just the launch isn't going to go through. So these scams are just going to continue to happen. Scammers will scam forever, but just realize that this has nothing to do with Bitcoin. It has more to do with phishing email. Like, it has as much to do with Bitcoin as it has to do with email. Scams are scams. Multi-level marketing has more to do with the multi-level marketing schemes than with Bitcoin. So it's not big crypto. It is just big scams. But anyways, okay, next headline. Billionaire Bill Ackman sparks debate on Bitcoin mining and electricity spiral. So let's see, this is a link to Crypto Slate article. This is what Bill Ackman said in his tweet, quote, a scenario, Bitcoin price rise leads to increased mining and greater energy use, driving up the cost of energy, causing inflation to rise and the dollar to decline, driving demand for Bitcoin and increased mining, driving demand for energy, and the cycle continues. Bitcoin goes to infinity, energy prices skyrocket, and the economy collapses. Maybe I should buy some Bitcoin. So there have been a lot of good refutations. I saw Michael Saylor had one. I think Pierre Rochard had one. There was several really good ones. I think his name is Jeff Cross. I'm sorry if I'm messing that up, but I know the last name is Cross. He's quoted in this article with having a good response. And Ackman has been relatively gracious in accepting the feedback. So I think that's a testament to his intellectual honesty. I don't know a ton about Bill Ackman. I know that he spoke out against the Harvard stuff. He's a big donor to Harvard and all that went on recently. He also called the top perfectly in the tenure, like to the day. I think he was one day early with saying that he got out, or he's closing his shorts on the U.S. on treasuries. So yeah, he's extremely intelligent investor, and his response to all of this feedback that breaks people usually, because these people that usually tweet about Bitcoin are have their arguments are in bad faith, and so they're defensive. I don't think Bill Ackman here was at all in bad faith. He was accepting of feedback, and that's good. But I want to respond to this, and I want to take my particular Bitcoin and markets angle on all of this. So, particularly the idea, because his whole thing is about this feedback loop, right? Well, what if a step in that feedback loop isn't correct, then his argument doesn't work, right? And so that's where I want to kind of go into this. So, particular idea that rising energy costs cause inflation. And that's a key link in his chain. I think Ackman is right about the rising price of Bitcoin, leading to a rising demand for energy from Bitcoin miners. Whether that comes from a bottom feeder strategy, which is what Cross was talking about in the article, or as incentive for renewables. I get the feeling that we are coloring around the edges instead of going for the heart of the debate. So a lot of people just say, oh, you're wrong about Bitcoin. Bitcoin is actually good for this or this or this. And that's, like I say, it's coloring around the edges. It's talking about something that's not necessarily a killing blow. So this is my critique is a fundamental critique about the feedback mechanisms that he's talking about here. So rising energy prices, unless matched with an increase in the money supply, is a deflationary force. So not what he says up here, that driving up the cost of energy causing inflation. So it only causes inflation or sustained higher prices if it is met with an increase in the money supply. So if it's not, then it is deflationary. And as you attack the dollar, quote unquote, attack the dollar, or as he said, sorry, as he says, the economy collapses. What happens when the economy collapses? It's a credit event. It's a deflationary event. So this is a deflationary event that is somehow a spiral of inflation. So, anyways, as prices go up because of demand for the good, not the number of currency units, that money to pay the higher prices must come from somewhere. First, they tend to come from savings to maintain levels of consumption elsewhere. So you're not going to cut back on other things if you have some extra money in your bank account. You're going to drain your bank account first, then you're going to start cutting back on your consumption elsewhere. I mean, that's a general rule. Of course, some people are better at cutting back immediately and saving a cushion in their savings, but most people don't do that. But eventually, it affects demand broadly in the economy and leads to a deflationary recession. Deflationary recession, not a collapse in the economy from runaway inflation. Ackman says, and the cycle continues. But he only gets there by misunderstanding inflation as prices and not money supply. His whole feedback loop is wrong. So, anyway, that is my response to Bill Ackman. Maybe we can get in that more in the future. Guys, if you're tuning in and you're on YouTube, Rumble, even Telegram, you have to make comments in the post there. But on YouTube and Rumble, put comments in to the comment section down below, and I'll go through, read your comments and questions at the end here. So, okay, strong meme game is the next headline. And stand by, I have to yell at this dog. 1 second. All right, back. My kids are supposed to be keeping the dogs quiet, or the dog, and they're not. We also bought chickens yesterday, so we're excited for that as a family. We have a little backyard coop that I still need to build, but that is coming. Kids are excited for that. Okay, strong meme game. I just saw this meme, and I wanted to share it with everybody because it was so dang good. Uh, do not try and time the top. That's impossible. Instead, try to realize the truth. What's the truth? There is no top. Bitcoin is such a mind F that it seriously feels sometimes like the Matrix. You have to shift your entire way that you view things to make it make sense, right? And or to grasp it. And that's what this meme kind of encapsulates to me. So, okay, cool meme. Let's go on. That's all the Bitcoin headlines. Let's go on to the macro headlines. So, February CPI comes in hot. I was unable to live stream this, last week when the CPI came out, but I'll be back for next month. Also, the FOMC is coming up this week, and I'll be here for that. So make sure you guys tune in. If you watch on Rumble or YouTube, set up your notifications because my live streams I go live different times. So most of the time in the afternoon, but there's no set schedule. So set those notifications up so you know when to come and watch. Anyway, headlines. All items CPI came in hot at 0.4% month over month. I'm expecting lower CPI, and at first glance, I was expecting lower CPI. And at first glance, this seems to contradict my forecast. However, there is no time frame other than we are headed lower in this business cycle before higher. So we're not going to see, my forecast is we're not going to see a reacceleration up to 1% month over month or 9% year over year, 10% year over year. We're not going to see that. We're going to see 1% or zero before we see those higher numbers again. And those could come in the future. But most likely, the path forward is into recession. Okay. And as you go into recession, CPI is going to come down. So 60% of this 40% or 60% of the 0.4% came from shelter and gasoline alone. I'll remind you that we need spikes of CPI to stress the economy to make it go lower. And this is just okay. So like I said with the Bill Ackman thing, if you aren't getting actual money printing, and in our system, that would be net credit growth. And net credit growth isn't just like commercial bank loans either. That's the main part of it. But there's also this gigantic shadow banking system. And so you have to have credit growth in commercial banks and in the shadow banking system. Everything has to be growing, and there has to be net credit creation. Then you can get sustained higher inflation, sustained higher price rises. But if you don't have that, what happens when you get a boost in prices, which is CPI spiking, okay, temporarily spiking or whatever, that's going to just stress the economy out because there's not money to meet those higher prices. I hope that makes sense. And anyway, so if we just see it going up, it's probably going to come down. There's no straight lines. If CPI stayed steady at 3% for a year, the total aggregated stress throughout that would still accumulate. But with small spikes in CPI, that stress accumulates faster, resulting in recession sooner. Maybe I'll have to write a whole nother blog post on that. But if you guys have been listening to my content, this should make sense to you. We are in a normal range. You can see this post GFC normal range right here. We had this higher rate of CPI, and then now we are volatile, but we're still within this same range under 0.5% month over month. And it's going up. It's probably going to come down, just like it's sawtoothed here. It's going to continue to sawtooth just like it does here. So most likely the next couple prints are going to be lower on CPI. Next headline: East Asian societies have the world's lowest birth rates and are learning that throwing a bit of money at the problem isn't solving anything. I've been talking about demographics for a while. Talked about it on the pregame show on Telegram. But this story headline came out from Fortune, and I just noticed that we're getting a lot more of this talk in the media about demographics, and I think that's going to continue big time over the next 10 years. Is going to become one of the pivotal points to talk about in macro. So demographics are getting more and more attention. People have to learn the basics of what's happening first before they can face the issue. Many people still think our population, our problem is overpopulation. You see all these birth rates just have cratered. Really, they big time turned down in the 70s. That's when this became obvious, I think, to forward seeing demographers at the time, like around the early 70s. They were like, oh my God, there's a problem. But you can see 50 years later, and we still don't notice the problem. The propaganda against, the climate hysteria and overpopulation of the planet is so strong that it's going to take a long time, I think, for people just to realize, just to agree that there is a problem with demographics. So from this story, I quote, a low birth rate leads to a shrinking population and a smaller workforce to produce the goods and services that lead to economic growth. Slower economic activity results in drops in fiscal revenue, giving fewer resources to a government that now needs to provide welfare for a growing elderly population. We talked about this on the pregame show on Telegram, but I want to say, notice the focus on production. So, smaller workforce to produce goods and services. And that focus on production, that always leads to this false solution of robots. We just think we can, oh yeah, robots can do all the work for us. The bigger problem is the decline in demand or consumption. As people get older, the age groups, the population bubble gets older, and older people consume less. They demand less than younger people. Most of the time, the youngest generation, 18 to 45 or whatever, that's the biggest consumption age. But like Japan's average age is, I think, 49. So they are like, they're past, their average person is past peak consumption. So demand is going to crash. Old folks, a lot of times you get in your 80s and 90s, you're just happy to wake up, get a cup of tea, whatever, talk with your neighbors, and et cetera, et cetera. Like, you're not going out there taking family vacations, doing trips, buying new cars, buying new homes, clothes, all this stuff, right? So your demand as you get older collapses. That is the primary story here. It's a demand story. Demographics is a demand story. But they still, even when they do have some good coverage over this demographic issue, they talk about the production of goods and services, not the demand for goods and services, because that's kind of crazy to think about. The demand for goods and services is going to go down. But okay. What else do I say? Bad economic times also lead to less spending and tightening of the belt. So it's ultimately a demand-led decline, not a production decline. It'd be super easy to automate things, but that's not where the decline comes from. It comes from the decline in demand. Quoting from the article, the strange thing with fertility is nobody really knows what's going on. Anna Rotkirch, a fellow director at Family Federation of Finland's Population Research Institute, told the Financial Times earlier this year. The demographer, who advises former Prime Minister Sanna Marin on population policy, now thinks fertility decline is, quote, not primarily driven by economics or family policies. It's something cultural, psychological, biological, cognitive, she says. So it's great to see that this is what people are starting to say, that it is not about economics or family policy. It's about culture, psychology, biology, and cognitive stuff. It is primarily a shift in women's cultural position relative to the other three. So a shift in a women's cultural position has consequences. That has psychological consequences, biological consequences, and cognitive consequences. So psychological, okay, we can just talk about this one. As the average age of marriage and the average age of wanting to have kids shifts past 30, then you can't have as many kids as you would have had. So instead, you want you would have had 3 kids. Now you have your first kid at 34. You have complications. You're only going to have 1. So this it's the woman's cultural relative position to the other 3 that's causing problems here. So the cultural shift women have undertaken in the last 50 years is not conducive to population stability. The demographic pain will continue until that changes. And I had a whole other paragraph that I was going to include, but I'm probably going to write a whole blog post on that here in the coming weeks. All right. China's next story is China's growth bump may dent urgency for more stimulus. The CCP is trying to blow smoke up our rears. Let me click on this and go to this story here. This is archived from Bloomberg. And economy seen as stabilizing, but consumer demand remains weak. Production investment strength may delay stimulus. Okay, blah, 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 blah. China's strong factory output and investment growth at the start of the year raised doubts over how some policymakers will set up support still needed to boost demand and reach an ambitious growth target. Industrial output rose 7% year over year in February, fastest 2 years and significantly exceeding estimates. Growth in fixed asset investments accelerated 4.2%, strongest since April. Retail sales increased 5.5%, roughly in line with projections. Okay, so all of that stuff is what I'm saying is blowing smoke. It's not real. They are claiming their industrial output rose 7%, but we have to take all their stats with a grain of salt, especially metrics that can be managed easily. So how do you manage industrial output? I mean, you could fudge the numbers, obviously, but let's say you don't want to fudge the numbers so explicitly. How else would you mess with that? You would just produce a lot of things uneconomically. So you produce a lot of concrete or a lot of steel at a loss, just so that you could target this number, 7% year over year, or higher, whatever. So they're fudging numbers. This does not say that it's economic growth. It says that output grew. Absolute hard, cold rolled steel output, grew by 7%. But that has nothing to say about the health of the economy. GDP in China is measured differently than GDP in the US. The US measures output, like spending, in a free market too, or relatively free market. So the US measures like how much money was spent. How much did you spend out there in the economy? How much did the economy spend? It includes government spending as well, which is a bad thing, but it measures spending. And what is spending? Let's say it's relatively voluntary exchange. So it means that you have benefited from something it's economic, in other words. Where in China, they measure dictates. It has nothing to do with voluntary exchange where there's economic activity. I mean profitable. When I say uneconomic, I mean it's unprofitable. It shouldn't happen. But it happens because it's forced. It's coerced to happen. So the US does not measure that, really. I mean, I guess you could say government spending is kind of like that. But overall, China is 100% like that. So, for example, the CCP will set a target of 5% growth, and the local governments will go and make it happen. It doesn't matter if it's productive uses of capital. They'll build ghost cities or bridges to nowhere. Straight up cook the books to hit targets. Recently, the manufacturing PMI of the manufacturing giant, being China, has remained in contraction territory for most of the last year. So PMI is interesting. This is not necessarily, I mean, it is published by the National Bureau of Statistics or whatever over there in China, the MBS. So this is a government statistic. However, it's not from the normal chain of CCP, down to regional governments, down to local governments, back up to regional government, reporting through the chain. This is a survey of purchasing managers, basically. And so it's a different form, it's a different sort of methodology and source of data than things like just industrial output. Okay. This is asking, are you expanding? Are you contracting? Okay. And what we see here in this dark blue line, let me make this bigger, is China is supposed to be a manufacturing powerhouse, right? The factory of the world, where even if we go back 2 years, most of it has been in contraction, according to surveying actual people. So the non-manufacturing PMI might be more positive, but 51 isn't that great. They're used to being 55, 60. So 51 is not that great. So anyway, that is that. I have a couple more charts down here. They also continue to cut policy rates. Well, if they're doing so great, why would they have to cut policy rates? This is the most recent one, their 5-year rate. While overall credit, sorry, I kind of worded this weird. While overall credit, the core of a modern economy, continues to contract. Remember, it is net credit creation that is important, and it looks like China is in deflation. So this is China loans expand at slowest pace on record in February. You can see the blue line. Aggregate financing stock continues to go down. And net. So if they only expand the credit at 8% this year, but the interest rates are, there's more being paid off than is being newly created. So net it's negative. And we can see that in the next chart here. So this is Chinese families repay more mortgages than new borrowings. So you see net negative. And overall in the past, if this chart went back further, we would see consistently positive, maybe one bad month, consistently positive. And then now we have ups and downs and negatives and all sorts of stuff. So the Chinese story is over the way it was before, how it came up. That whole story is over. But okay, that is all of my headlines. Let's get into price analysis. And actually, I'm going to take a look real quick at the chat here. Where am I at? There we go. Chat. What's up, guys? John Delaney's here. BTC Moon Guy. Dex Invictus is not with us, but I will be trying to get to all of your guys' comments here at the end. Appreciate you guys for coming. Hope you're having a good Monday. Let's get into price. Price is the only thing that matters. A lot of people don't like when I say that. But if Bitcoin consistently went down in value instead of up, we wouldn't be here. So, okay, it's been 2 weeks. Price is, very time sensitive. So I wanted to go back and look at the last issue. I try to do this every now and then. So this is why I said last issue. On the chart below, I highlighted 2 weeks that they were not big sell-offs, but allowed the RSI to cool down in a sideways manner. I don't see that we have that time this time, though. So I don't think back then, 2 weeks ago, I didn't think we had time enough to slow down. I thought we had to have a sell-off to get all of our reset all of the metrics here. Therefore, I have to do it. I have to call for a sell-off. We could touch the all-time high or even pass it by a little bit. So that was before we had broken all-time high. But I think it is most likely that daily and weekly RSI will cool off very soon. And here's that chart. Let me click back in it. Those 2 weeks, they were negative. They allowed the RSI to cool down, but we went sideways during that time. And that was kind of what I was hoping for this time. But we were running out of time before the banking crisis of Q1. We haven't seen too much of that in the last week and a half. But then we also have the halving coming up in a month from now. So we're kind of running out of time to do this sideways consolidation, which leads me to believe that at that time, most likely it was going to be some sort of negative move to reset some of these things. So now we're to this week. Price is still struggling to close above the previous all-time high of 69,000. So we've spent so much time above 69,000 over the last week, 2 weeks. Sorry. I still have a tickle in my throat, and my whole family got sick last week as well. But okay, as you can see on the weekly RSI, it has cooled off from 88 down to 83. So this red line is the all-time high. We have not closed above it on the weekly, at least according to Bitstamp. So we're struggling with that all-time high to close above it. And we have cooled off down here in the RSI. Hopefully we can continue to come down and touch 70 or so and then go back up. But that's going to take some effort here, some specific path to get to that. Not going straight up. Okay, what else did I say? It would be nice for it to cool all the way off to 70, but that would take considerable downward price movement to at least 60,000 when the environment doesn't allow for that. So the environment I'm talking about here is the ETF environment, Mr. 100 buying like 600, 700 Bitcoins a day. There's just so much buying pressure that I don't think the environment is going to allow for a significant sell-off. So we're kind of stuck here. We're kind of stuck. And how is it going to break? I don't know. It's setting up for volatility, guys. It's setting up for volatility. And, that would mean a big sell-off of some sort. Rapid sell-off. Because it's the marginal Satoshi, right? That's traded. It's not the exact supply and demand, but over a long-term time frame, that marginal Satoshi is going to get more and more expensive. So anyway, we're setting up for some volatility. It might be the case that prices go sideways until the halving, despite constant inflows. So going back to this, we could see several more weeks, 3-4 weeks of sideways action. That would give plenty of time for RSI to come down before the halving. We're kind of stuck in a weird spot. This overall move is starting to look parabolic, though. If you zoom out here, you see the rate of increase is going higher, starting to get parabolic. So are we going to continue to see that going into the halving? Maybe. This overall move is starting to look parabolic. It's not quite to the vertical stage, though. We could make one more push pre-halving. Could we make one more push pre-halving? Yes. Any furtherance of this parabola would be vertical. That would put 100K in play pre-halving. I don't think that is the likely thing to happen, though. Several macro indicators like the US 10-year are signaling that some outside pressure driving Bitcoin's price up is lessening temporarily. So if you guys are been listening to me for a while, the US 10-year, as rates go down, as they have been over the last 6 months, as rates go down, that means that money's tightening and we're going towards some sort of crisis. As rates are going up, that's positive. That means that the economy can support it, that we're growing, and that the money is loose. It's a fallacy. It's the interest rate fallacy from Friedman. And so if the US 10-year, which right now is going up, let's take a look at that chart since I did not include it. So let's share this tab and let's go down to US 10-year. And we'll go to the daily. This is still surprising me that it's kind of just unable to go this way. But if we look at the last, say, 5-6 trading days, right, it's going up. What does that mean? And this is not an insignificant move. What's the percentage move on this? So from the bottom to where we are, it's 7.5%. That's significant in the bond world, right? So this means that there's some economic force underneath it. And when rates are going up, that means money is loosening. That's not good for Bitcoin. Because Bitcoin is a deflation hedge, is primarily a deflation hedge at this point. And as the global economy is malfunctioning, then Bitcoin serves as a remedy to that malfunction. And so if rates are rising, that means there's no the malfunction is not affecting the economy that much because the economy is growing, able to support higher interest rates. So Bitcoin will benefit from falling interest rates. And so if interest rates are rising right now, that would lend some evidence towards a sell-off in Bitcoin. Okay, I made it full circle. Let's go back to the report. So where was that coming from? Several macro indicators like the US 10-year are signaling that some outside pressure driving Bitcoin's price is lessening. So that's what we just went over. Most likely we continue. Man, typo here. Most likely we will continue a consolidation for at least the next week, and it could stretch into the halving. So that's my price section. Then I have some of these great charts that I've been noticing out there. Charts BTC, he got started in the last cycle, and he always had some really good formatted charts, but now he's starting to do some more interesting things. And this is one that stood out to me. So this is realized price, Bitcoin price up here in orange versus realized price in white. And if this was log, you could see that the realized price, really starts to bend up at the beginning of a bull market. So you can see it didn't bend up in any of these like bumps along the way in this zone. And it really didn't bump up much last year. But this year, it's really started to curve up as the price is going higher. So this is like signaling the start of a bull market. Now, down here on the bottom is very interesting. So this is realized price over the 200-day moving average of the realized price. So this is kind of like a realized price Mayer multiple. And it's starting to go higher, which is always coincident with rising prices. Very, very interesting chart. Let's see, what did I say here? Below chart shows what I said. The bottom line, we might call this the realized Mayer multiple. We should not be discussing an ultimate top of the cycle until roughly 1.8 to 2 on the realized Mayer multiple. Everything else is a correction along the way to new all-time highs. So, very interesting chart by Charts BTC. Check him out on Twitter. Okay, next chart I have here. The first time I saw it, it was like, took me probably 5 minutes staring at this chart to see where everything is lining up, see everything, how it's working on this. This kind of really gave me a headache at first, but it is fantastic. It's by Onchain College. So check them out on Twitter. They show several metrics: MVRV, which is market value to realized value, the Pule multiple, that is the value of daily issuance divided by the 1-year average of the value of daily issuance. Reserve risk is long-time holder confidence per price. And the SOPR, SOPR, that is the spent output in profit ratio. And it's adjusted. That's what the A is for. There are many more on-chain metrics, but these 4 do a fantastic job of aligning bullish or bearish at tops and bottoms. We are just starting to see some alignment now. So let me make this bigger. So the colored sections in these little mountains here, well, I don't know, what do you want to call them? Those are these different metrics. And when they all align, That is a top. It's not exactly when they start aligning, it's not the top, but they all align at signaling a top at the top. And then when it's at the bottom, they're all aligning at the bottoms. Like look at this one here. At the end of 2018 into 2019, they're all aligning at this bottom, clearly signaling a bottom. All aligning at these tops. All aligning at these tops. And so right now we don't see the aligning at a top. So I thought this was an interesting, very, very interesting chart. Check out Onchain College on Twitter. All right, let's get into mining headlines. So, guys, also just a admin break here. Bitcoin and Markets, live streaming my free weekly newsletter where I go through to discuss what I wrote and then any tangents that I go on. And going out on YouTube, Rumble, Twitter today, and Telegram. So check out all of those. Like, comment, subscribe, share this out with people. Very consistent and I think trustworthy Bitcoin content over years, 5 years of doing this newsletter. And yeah, so appreciate you guys subscribing. Appreciate all the supporters on bitcoinandmarkets.com. Let's continue with our last section of the day. This is Bitcoin mining. All right. Oh, and last admin note, I will be looking at your comments at the end, so put them down below. Okay, Bitcoin miner marathon plans to make purchases to offset rewards halving. So the title is not very descriptive, but this was an interesting quote from this article. So post halving, there will be some miners that lose profitability, may be challenged, or maybe looking for an exit as their revenues will drop because of the Bitcoin reward will drop, Teal says. He's like a CTO or CEO of Marathon. And I'm putting this here because post halving, there's a lot of FUD around post halving. People think, when the reward gets cut in half, then a lot of these miners are going to be not profitable, which is pretty much not the case. One thing I've been pointing out recently on the Bitcoin Magazine Pro miner dashboard is that the US dollar revenue, when measured in US dollars, continues to climb. Like every month it's going up 15% or so. So the US dollar revenue is going up crazy, even though the Bitcoin revenue has fallen, mainly because the fees have gone down, but also during the halving, it's going to get cut in half. Okay, well, what if the Bitcoin or the dollar measured revenue is already double where it was? Well, then the halving just puts you back there. So it's an interesting dynamic leading up to the halving is to see the US dollar reward actually going higher. But anyway, this is a guy from Marathon, and he says the simple math is if the industry average break even was around 23,000 per Bitcoin. So that's interesting that he's thinking it's that. I think that's pretty accurate. Maybe it's lower for Marathon than, like, say, more independent, smaller guys. They might have a $30,000 break even or something, but it's somewhere in that ballpark. Okay. And after the halving, then it will be 43,000, he's saying. So again, ballpark, you're talking 50, 60,000 after the halving, even for the smaller miners. So this is pretty interesting. That means there's not going to be a lot of hiccup around the profitability of miners around the halving. So anyway, check that out. Of course, usually all my bullet points are linked. All right, let's continue to the next article. Biden's 30% tax would destroy Bitcoin mining in the US, industry says. So they have reintroduced the 30% mining tax. This is just a screenshot from the article on Forbes. And this is a quote from the article. So the Bitcoin mining industry is in an uproar over the White House after the White House reintroduced on Tuesday a controversial proposal for a tax on mining. The Digital Asset Mining Energy Tax, or DAME for short, would subject Bitcoin miners to a 30% excise tax on their electricity costs. Quote, implementing a blanket 30% federal tax on Bitcoin mining will certainly kill the sector and wipe out billions of dollars of investor value virtually immediately in the United States. Taras Kulik, CEO of Sunnyside Digital, a mining hardware provider, told DL News. Continuing, quote, a proposed 30% punitive tax on Bitcoin mining would destroy any foothold the industry has in America, Senator Loomis, a Republican from Wyoming, and one of the most pro-Bitcoin legislators in Congress, posted on X. So this is going nowhere. They constantly trying to push, they try to get the miners to report all of this sensitive information, and they won in court, so then they don't have to do that. The administration repealed or took back that survey that they were doing. The first time this mining tax came through, it pretty much disappeared. Now they're bringing it up again. It's going to disappear again. Okay, billionaires are involved now. Billionaires. Wall Street is involved now. You are not going to come in here and put a 30% tax on Bitcoin mining. It's just not going to happen, people. Okay? Another thing I'll point out is they do say the Bitcoin mining industry, all right? But then they go in to say all this about digital asset miners. No, it's Bitcoin miners. Even these experts are saying digital mining when it's Bitcoin mining. And even Cynthia Loomis, the pro-Bitcoin senator, she says a 30% punitive tax on digital asset mining. What? It's Bitcoin mining. 99.999% of mining of these types of things are Bitcoin. It's a Bitcoin mining tax. It's not a tax on any other kind of mining. Okay, Cynthia Loomis, are these people? She knows this. She's not stupid. She's not ignorant. She's not malicious. I think people use this digital asset word to be cool. It's the new slang. It's the new vocab that you got to keep up on. Digital asset mining. No, it's Bitcoin mining. Cynthia, let's get into hash rate and difficulty. Wrapping it up here pretty soon. Of course, I'll get to your questions and comments down below at the end here. Difficulty adjusted by 5.8% last Thursday. Average hash rate is slowly climbing, as you can see in the orange solid line below. The last period began with slow blocks and an estimated adjustment after several days of negative 1%, and you can see that on the last report. The hash rate picked up significantly in the second half of that difficulty period, resulting in a nice 5% gain. So you can see here, right here at the beginning of March, it looks like we had that drop. Hash rate kind of went sideways. Then we had a couple big days, and it went from being a negative in the first couple days to then being positive. And the orange line, which is the average, I think it's a 7-day average of the hash rate, and it's going higher now. Okay. So stable, strong, 5% increase. Like might say that's a little bit high, like a little fast paced, but it's healthy. It's nothing that can't be sustained for a long period of time, that kind of growth. Okay, mempool. Mempool has once again started to shrink. The slight increase we saw with the 4 March price spike has relaxed. This is pretty bullish if you ask me. The hype was noticeable, but the signal of attracting sellers has disappeared from the mempool. So I've talked about this a lot. Like during price spikes, you'll see the mempool fill up, and especially higher fee people will, they're sending $10,000 to the exchange, or $10,000 worth of Bitcoin to the exchange. They're willing to pay a $10 fee. They don't really care. So they're relatively fee insensitive. So during those periods, we'll see a big spike in the mempool. And we did see a spike here on the 4th that corresponded with that price spike, but it has since come down. So, yeah, those price spikes, they attract sellers. And you might be able to, this is worth some back study. Going back and looking at the amount of insensitive traffic on the price spikes compared to the pullback, if there is a pullback that comes from that, and I bet it is significantly correlated. The more price insensitive people are, according to the mempool, that the bigger the price pullback. But anyway, some interesting things to think about here. And lastly, we have inscriptions. The number of daily inscriptions has really fallen. The decline in the monthly moving average has slowed, however, or plateaued at a relatively low level. There will likely be another period of higher volumes in inscriptions, but as of now, there is no real market for these things. They are a waste of money. Let's look at this. See, the dark line is the 1 month moving average. It has plateaued, but it is at very low levels. Okay, that's the number of inscriptions. One thing I wrote about recently, man, where did I write about that? I think it was on, I can't remember where I wrote that. Had to have been on Bitcoin Magazine Pro. But I was talking about the inscriptions is a measure of speculative activity. So it's kind of a measure of FOMO for Bitcoin. In the past, that would be altcoins. So altcoins served as this speculative gauge of the overall system. But now, as we're moving into other things, more Bitcoin focused, Bitcoin ETFs and Bitcoin, not shitcoins, not ETFs or not NFTs on Ethereum and Solana, but NFTs on Bitcoin. So as we see the shift, the inscription number should indicate speculative intensity. So if right now we have lower inscription rates, that we can tell something about the type of investor buying these ETFs. We can tell about the type of investors getting in and thinking about Bitcoin and getting involved right now. It's not the more speculative retail end of the spectrum. It is the more professional end of the spectrum. So I think that's interesting. Okay, fees paid by inscriptions over the last 2 weeks shows a slight increase followed by a dip to near lows. So you can see 2 weeks ago when I didn't do my report, last week, then it was a little bit higher, but now has dipped back down almost to the lows. It's not quite a low here from early February, but the fees paid by inscriptions are very low, $1 or $2 million per week. Okay, and that's it for the report. So let me go and check the comments out. I got to minimize this screen here. All right, so not going to talk about that one. Okay, let's see. Why can't GBTC just lower their fees rather than spin off another ETF? That's a good question, Moon Guy. I don't know. Maybe there's just too much baggage with GBTC. Maybe they're changing up the structure elsewhere. I mean, they just they just changed up GBTC from a closed trust to an ETF. And maybe the underlying structure wasn't exactly how they wanted, and it would be maybe difficult to change that. I don't know. But it kind of seems like they want to wrap up GBTC and just roll it into BTC ticker, which I will be surprised if they give that to them, actually. Okay, John Delaney. For the Ackman argument, it doesn't hold because of the demand response programs. BTC doesn't drive higher prices because it never competes with humans that are paying more per terawatt hour. Yeah, I agree. That's a technical argument that I agree with. But it's also not an argument that can be proven 100%. You know, that it is kind of like, I don't know what I'm trying to say here, is that is most likely to happen. Okay, that the Bitcoin miners, they don't compete against people for the regular, say, residential electricity. I agree with that, but that's not always the case. You have miners at home. There's home miners that mine in their basement, that heat their swimming pools or whatever with miners, and so that's not 100% accurate. Also, we don't know about in the future. I think that's probably the case, is that Bitcoin is going to push, mostly it's going to be pushing distant energy, flares out in unconnected wells and stuff, or hydropower that's deep into Canada somewhere, or Siberia. So those types of things, stranded energy, yeah, I think that's the case. But I'm attacking it from a fundamental economics position, not from a energy specific position. But yeah, good points. Okay, let's see. I got only 2 minutes, but let me check comments on Telegram. On Spaces, it's not Spaces as far as I know. Let me check. It should be just going normal, like a tweet, playing live video in a tweet. Let me see if I can pull that up. Did I close Twitter? That would be bad. There we go. Where am I? Profile. There we are. Hey, 421 viewers right now, or views total 280. Trying to grow that reach out there. Guys, if you're watching on Twitter, check out the YouTube and the Telegram. It's linked in my bio. It's linked in a lot of the tweets that I put out about these live streams. But okay, let me check one more time in the comments. Pull it up. All right, well, that's going to do it, guys. Thanks for joining me. Have a good start. I hope you had a good start to the week, and hope you have a good rest of the week. And I will see you guys on the next live stream. Bye.